Hey, welcome everybody to the 40 Finance channel. Doing a little Fed watching today as we're supposed to get the press release or the abbreviated notes around 2 o'clock here today on which way the Fed thinks they're going on interest rates tapering. It'll be interesting. Usually the build-up towards this is more unsettled than the aftermath in my experience, but a lot of it depends on what indeed they say. So in terms of what to expect, or what am I expecting, I would say that the taper portion, which is purchasing the mortgage securities and whatnot, I would say that the taper aspect has been in play for quite some time. And I think that, they probably speed it up a little bit. As far as like an actual interest rate hike, I think everybody agrees that's coming in 2022. Nothing that we hear today will say that that's going to be tomorrow or the next day or whatever. They may put a target on it, like, beginning in March or something, but we're not going to see anything tomorrow that's different than today. It's just speculation at this point, but it'll be interesting to read, so I thought I'd hop on, and once we get to 2 o'clock, I'll switch over and we'll see if we can find a news piece that breaks it down. Mr. Mugai, good to see you. Mughal, I think it is. I always say Mugai, but thanks for coming in. And as far as today goes, in general, we have had some weakness that has bounced back a little bit. Let me pull these charts up if they load here. So here's QQQ, which is a good one to follow during these times. And, I did year to date. I meant to do 1 day. Started out, a little bit high, and then you dropped all the way down almost to 15,000. And that's not QQQ. What am I doing? Let's go to QQQ. That's just NASDAQ Composite. Starting off slow here. All right, so you rose to 388 first thing in the morning. The low was about noon at 383, and today you're at 385. You want to look at the SPY today. Started off all right. It dipped around the same time, down to 460. And then across the board, you see at the top, minus 0.2% on S&P. Dow minus 0.11, NASDAQ 0.67. I think the NASDAQ did have a time when it was in the 0.75s or so, or maybe even in the 0.8s. But anyway, not a huge shakeup today. We did, however, see some things get hammered more than others. Let's take a look while we're waiting for this news to come in. I'm going to sort this. This is just losers today. I might refresh. China, a lot of China talk came back up again today. From what I saw, no real, definitive news on which way stuff is going to go. But it's negative headlines again. So Alibaba down minus 5%. That is not the low, though, for BABA. In fact, they recently bounced up to 125. So this just kind of erases the recent bounce. Shopify, in other news, Shopify down about 4% to 1302. That is one that, in my personal opinion, I think it could lose a little bit more and probably be closer to a fair valuation. Let's see, Rivian down minus 4%. I don't play too much in the EV space, but Rivian certainly has been interesting, particularly with them winning Car of the Year at Motor Trend, which I don't even know how many people follow that award anymore, but back in the day of magazines, Motor Trend Car of the Year, Car and Driver Car of the Year, I think technically it's Truck of the Year here. That was big news. I was surprised to see that. So again, I don't know if it's as big of a deal as it would have been 15, 20 years ago. Who else we got outside of China? You got Snap down 4%, under $45 now. And NetEase down 3%. Roblox continues to kind of bleed out at minus 11%. There's probably a day when Roblox looks pretty attractive, whether you're looking at it from a metaverse situation or just, frankly, the video game itself with the in-game purchases. I don't know. I have my eye on it if I remember correctly. Let me check. I don't think we're talking about profitability, though, and that's going to be a big problem for a stock like this in the near term. Yeah, you're minus 76 cents even next year. So, you know, my 2 cents right now is definitely look for stocks with EPS so that you can have some sort of tie-in to a fundamental floor. Because if things go south, you know, in the market more south than they've went now, it's hard to make the argument for stocks without EPS. You can go by price to sales, you can do enterprise valuations, you can do your DCF and all this other stuff. But at the end of the day, no profits equals a company that's not necessarily doing good for shareholder returns. All right, so obviously if you bought into Roblox in a traditional sense, you're hoping for the 5-7 year run, and that's okay. But you know, you're at risk in the current environment, and the same goes for everything else that doesn't have any earnings per share. You're at risk in the short-term environment for losing even more value from where you sit today if you can't say we have a forward PE of 30, 40, 50, 60, 70, whatever it is. You can really ground yourself in those stocks knowing that there's a certain point that no one is going to second guess. Let's just say Apple, just to pick one. Apple goes down to a forward PE of 10. No one has to do any more math, okay? They just pile in and buy that. It's an obvious deal. Company is printing money and profits. So hopefully that makes sense. All right, we got Chi-Town MVP. How you doing? Good to see you. Romana Reddy, indices are not reflecting most of the stocks. That is correct. H. Montero, good to see you. Stanley Song, good to see you as well. All right, the clock just ticked 2:01. So I don't know if anyone will have dissected this news yet. I'm going to use my Seeking Alpha news tracker here. Nothing there. Let's go over to Yahoo. The problem is this stuff gets released and then someone has to read it and then write it on the news, right? So bear with me here while we check a few sources. Nothing. We'll go to CNBC. Nothing. Okay. Let's see. They got something going on live here. And this should tell us what I wanted to show you that I read somewhere else is that you have, here it is, updated policy statement at 2 p.m. followed by the press conference at 2:30. Here we go. 2:01. Only a headline right now because you can only write so fast, right? Fed will aggressively dial back its monthly bond buying, sets 3 rate hikes next year. That is, I feel like, a lot more than we thought. Sees 3 rate hikes next year, and to me that's for them to write that down, I think is pretty big. Usually in this scenario, and we'll have to see how the market reacts. You know, they do so much talking about talking. If you follow this at all, like they do so much planning and so much talking about what they might do that I think for them to come out and say 3 rate hikes for sure is pretty big. And let's just follow the tickers here at the top. You've got S&P flat, so actually up. Same with Dow, up from when we started this. NASDAQ's heading that way fairly rapidly. And yeah, so it looks like perhaps the early look at it says the uncertainty of what they're going to do, ending that, has helped some investors feel good about going forward. Now, it's very early. We're talking 2:04 p.m., and I'm just watching this NASDAQ ticker. That's crazy. Derek Ridland's here. How you doing? Just wait. Sniff is waiting for gold and silver to have its day. You know, I'm not a gold or silver guy, but I will say I can't believe how gold is just fiddling around, and silver too, for that matter. Again, I'm not a precious metals expert, but silver at 21.50, down 2% today. That's crazy. And it just has been that way for a long time. So good luck, Mr. Sniff. Numbers are going up. Ambiguity is out. I would agree with Raul. It looks like the sentiment says here early that we're tired of not knowing what's going to happen. We're tired of people thinking about interest rates hikes. Give it to us, punch us in the face. That seems to be what's happened. And the early look is that investors like the news. NASDAQ now positive, S&P positive. Interesting. So let's take a look at who might have switched to gainers real quick while we're just waiting for more of a breakdown. You can do this yourself on Yahoo. It's /gainers. At least on mine. I'm here in America. Yeah, we're ripping to the top. We're ripping upside now. 0.31, 0.22 on the Dow. NASDAQ at 0.1. I'm going to sort by market cap here. So far, it's very early, but Pfizer and Eli Lilly are part of the gainers that stand out, 8%. I guess Eli Lilly is 8%. Dassault Systems, I'm not familiar with. Progressive Insurance. Cloudflare. Very interesting, Cloudflare, to see that only because there's one that does not, I believe, does not have an earnings. Okay, so they might be flat next year in terms of earnings, but actually getting a boost from interest rates despite the fact that interest rates would insinuate that high growth names or risky names are perhaps going to see a shrink in their valuation multiples. That's not the way that it's reacting right now, though. Fortinet, I've got my eye on them recently. It's sort of it's a cybersecurity play. It's an older company, but they do have very nice fundamentals compared to their peers, I should say. CrowdStrike, another beneficiary. So I would say right here, Fortnite, or not Fortnite, Fortinet, Datadog, CrowdStrike, Cloudflare, Zscaler. The fact that these are ripping to me is surprising because I think all 3 or 4 of those lack earnings and in my opinion would be more at risk for a shrinking multiple, but hey, what do I know? You know, they have been beaten down quite a bit, and maybe folks are saying this is the bottom. We know what the bottom is now. Centennial One's a popular play. You got plus 5%. Asana, that one got beat up here recently. Project management software, plus 5.5. I'm just calling out the ones I know. And then here's up 12%. Ver Biotechnology. Freshworks up 6%. I don't know CMC Materials, but they had a big day, plus 31 so far. All right. Anybody else standing out? Those are the big ones. I'm going to switch back to the losers now. As you see, the NASDAQ is actually dipping its toe in 0.03%. So going a little bit backwards as the news spreads. Let's see if there's been any big changes in losers. Stanley Song, Epic Bubble. You know what my take is on the concept of a bubble in stocks right now is certainly in pockets, but not the whole market. I think that there's plenty of good companies that are making EPS numbers and comping well, but there is certainly sectors such as software, such as those database and IT services that we looked at a second ago that, I don't know, you got to do some pretty wonky math to give those things a fair valuation. So I'm not surprised they went down. What is the price for them ultimately? We shall see. I'm just going to eyeball this loser list, and we'll see if CNBC typed up anything about the recent announcement here. Now, I mean, I think Roadblocks was down to 95, and it bumped up for a second to 96. Rocket Companies, which is a stock that I own that I believe is a pretty darn good deal at $15.39. You have to buy into the fact that the mortgage/home sale world is going to look different than most people think that it is. And I am obviously in that camp. Most people think that 2022 is a rough year for mortgages and home sales. I see it differently. I'll do a video on that one day. Roku, sitting at 200 still. I'd say not much change there. All right, let's see what we can find out about the context. We have our staff writer has finally put some new stuff in here. Comparison of the committee statement compared with November 3. Text removed from the November statement in red. Text appearing for the first time. Black text appears in both. All right, so it sounds to me, and I'll try to make this bigger for you. Sounds to me like we can focus on do text appearing for the first time is in red and underlined. That's what I'm going to focus on. All right. Job gains have been solid in recent months, and the unemployment rate has declined substantially. Sizable price increases contribute to elevated levels of inflation. New variants of the virus. In support of these goals, here, well, we better start at the top on that one. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. In support of these goals, we have decided to keep the target range for federal funds rate at 0 to 0.25%, with inflation having exceeded 2% now for some time. The committee expects it will be appropriate to maintain this target range until labor market conditions have reached consistent levels, blah, blah, blah. In light of inflation developments, the committee decided to reduce the monthly pace of its asset purchases, la-di-da, and $10 billion for $10 billion for agency-backed mortgage securities, blah, blah, blah. Beginning January, the committee will increase its holdings of Treasury securities by at least $40 billion a month. So I guess that's slowing is what I read there. Not ending, but slowing on the purchases of the so-called tapering. Now, I don't see anything, and granted, I was just going by the red lines there. I did not see anything in there about 3 interest rate hikes. So perhaps that was in the last one. Or perhaps I missed it. But I did not see the headline there is, let's go back to the top. Let's see if we have any. Okay. So this is the headline. Fed will aggressively dial back its monthly bond buying and sees 3 rate hikes next year. Now, me eyeballing live that little document, I didn't see anything in there about 3 interest rate hikes, but let's see what they say. For one, Fed will accelerate reduction of monthly bond purchases. Duh, we already got that. After that wraps up around March, the central bank expects to start raising interest rates, which were held steady at this week's meeting. Projections released Wednesday indicate the Fed officials see as many as 3 rate hikes coming in 2022 with 2 in the following year. Okay, so a little bit of BS right here. Sees 3 rate hikes. So I read it differently. I read it as many as 3. Okay, so that to me is like, it could be anything. It could be 1. You know, they're obviously sensationalizing it slightly. But, you know, that, again, what I said at the top of the show, that March, you know, if you guys remember, I let off like, hey, we're not going to see anything happen until March. And that's kind of confirmed here. That could be good and bad, right? With the way inflation's going, because what are we? December 15th. Not that they can't do it before March, but they're so dang slow in everything that they do that if they wait until let's say March 15th, right? Who knows what inflation will be at that point? And I'm not a smart enough economics whiz to tell you how quickly it could go up. But it seems to me like we could still have a lot of damage from inflation between now and March 1st. And then when those rate hikes do happen, the first one does happen in March, it's not an instantaneous. We'll see some instantaneous stock market crap. But it's not like the world's problems are fixed when you add 0.25% to the interest rate. Like, so really, you have to wait to see what those kind of changes do from a policy standpoint, what the trickle-down effects are, and then you reanalyze. So the more I say that out loud, the more I think March, hopefully they're not making mistakes sitting on their hands and still watching, because I don't know about you guys, but it really does feel sometimes on the Fed is scared of hurting people's feelings. It's kind of how I look at it. I feel like they really, really play to public persona probably more than they should, right? They're obviously aware that the stock market is got some hot air in it. And I think that, you know, that has a pretty big impact on wealth. And I think that some of this conservative rate hike momentum in the face of documented inflation, it's kind of a little bit of hand-holding in there that, you know, easy for me to say. From Cincinnati, Ohio, easy for me to say, right? But it does feel like you just have to man up and come up and do what you got to do to protect the rest of the nation anyway. All right, I'm gonna look at some comments here. Derek's here. Did something happen on my stocks on my watch list? Just went straight up. Yeah. So Derek, I think you're kidding, but the Fed, you know what we're talking about on this one is the Fed. Press release came out, and it looks like, I'm just going to show you guys this. So let me do a refresh here. Yeah, so now market at 0.5% on the S&P 500. I mean, now it's pretty green. Dow 30%, NASDAQ 0.35. Probably very little chance of me getting a new low on QQQ today. Let's take a look, because that's heavy in the in concentration. But look at that. Granted, it's like the equivalent of $4. That's crazy And there's probably a lot of them like that. So now the poor Russell, I mean, this poor guy and everything in it, the small caps, and these guys cannot get a break. And I've got a few small caps. I did that little quick rocket summary. I'm trying to think who else is in there. Magnite is in there. I've got a stock called Sabre. That's like a travel bounce back. I think it's small cap. Whatever it is, you know, your SoFis would be in here, probably, without knowing their market cap. But man, small caps, just absolute tank. From the November 5th high of 2,400, just absolute down and dirty. It's the year to date. Russell at roughly the same point it was in late January. So, you know, the lost year, I guess you could call it. Everything else, though, seems to be going up. Oh, crypto market's going up. That's what Sniff put in here. Let me see. Yep. 3.92% on Bitcoin, Ethereum, yep, across the board. Those are the ones I watch. See the broader. Tether flat, USD down a little bit. Yeah, Solana with the big gain. I lost track of what happened to that one. I think there was a change in the amount of circulating supply, or one of those tech updates, but something bad happened to this one this week, and it looks like it's bouncing back strong. All right, Papa Joel, I missed the announcement. What was the outcome? The outcome was 3 interest rates, and if you believe the headlines, it's right here, aggressively dial back its monthly bond buying. So aggressive, you know, doesn't mean done, which I think is probably important. Now, here we go. This is, so I was looking for this information on the interest rate hikes, and now the truth is starting to come out. The majority of Fed members, remember, they kind of vote on it, they kind of talk about it, 3 interest rate hikes. So the majority see the 3. That's where they get it from. All right, which is fair. Wednesday's forecast showed 12 FOMC members expect at least 3 next year. 5 members expect 2, and 1 member expects 1. Okay, so with that in mind, if you figure they're debating it, right? If it was a jury, certainly more than 1, because you only have 1 person voting for 1, voting / expecting. 5 have 2, 12 have 3. So I'm going to take it back on that count. You know, I said I read it differently, that I thought 3 seemed like a lot. But if you've got 12 folks in there voting on 3, then maybe not. So, all right. So the announced rate hikes and the market is going up. You know, I'm glad that Derek said that. I just said that a second ago, and Derek, I was looking, I can't remember what time you joined, but I thought it was interesting because a lot of the no EPS stocks were going up immediately after this. Let's see who's going up here. And that is a little bit of a conundrum in the sense that if you're arguably overvalued, then interest rates are bad, right? Let's see, I'm going to take a look at the winners today, but I have to reload this stupid thing. And so it is a little bit confusing to me. Maybe, it's gainers. Sorry. Okay, so here we are on gainers. By the way, the NASDAQ's backtracking a little bit. We are really in a sort of fluctuation period. Darn it. Now this thing won't load. All right, give me market cap. And let's see our big winners. So Derek, since you brought up the point, why is the market going up? I called out these names, which I think you're familiar with: Datadog, CrowdStrike, Cloudflare, Zscaler, Mongo Database. Now they might actually have an EPS. These are stocks that are up. All right, Asana, project management. GitLab is an IPO basically. You know, why are these stocks up? I don't know. If I went in here and this list was Procter & Gamble, Walmart, Sam's Club, I'd get it. It'd make a little more sense to me. But we've got, you know, just about everybody. So it's a good question, and it'll be interesting to see how it shakes out. The other thing that could happen if you want to watch potential other developments is when Jerome Powell does the press conference at 2:30. Now you've got the information that's important. Okay, he's going to read what we just looked at together. But, you know, he'll get questions and he'll answer things. It's whatever. If you want to go see that, there's a chance that he slips up on that press conference and says something stupid and people get, or they feel like his sentiment is negative or something. We could see more activity from there. But yeah, I tell you what I'm going to do myself is wait this out. I don't think there's any reason to rush out and buy something here at 2:25 p.m. Because right in the short time that we have hung together, guys, you're talking about the NASDAQ is now only 0.09%, 0.08, right? S&P's down. We just talked about it being 0.5% up, and now you're sort of squandering positivity. So I don't know. I would hold strong. I would make sure that you have price targets for the stocks that you want to buy. The number one thing that I'm looking for right now is to add some QQQ just before the end of the year to sort of solidify my portfolio on like a 20%-ish basis. But the reason I bought some, but the reason honestly that I haven't bought more in this huge downturn is because Apple, Nvidia, who am I forgetting? Microsoft, and some of the others, they haven't went down. Now, Nvidia went down some, but I haven't seen any sort of cataclysmic behavior out of those companies, which are all riding higher than they have historically. And now we have interest rates. So in theory, if you're going to say, so something I do on this channel all the time that, you know, really most people have been able to ignore for the past year and a half is historical averages for P/E ratio for an established company. It's not going to work on an IPO or something that's just been out for a couple years. But here's where I'm going to show you one thing that I'm going to run. This starts to become relevant again. So here's Apple at 175. Now I have a, here's Apple at 175. Now I pay extra money for this Yahoo Finance historical statistics here. So you may not have this. But on an annual basis, okay, here's where we are today. There's 2021 and 2020. Pandemic, no interest rates, blah, blah, blah. If we head towards normal interest rates, which, by the way, in 2019 was probably between 3 and 4%, okay, this is where Apple was trading. So call it 20 times EPS. Now you're at 32 times EPS. Forward was 16 and 17. There's the Apple will be tied much more to these numbers if interest rates go up. All right, which means, in my opinion, there's room to go down price-wise from here. Not because the company sucks or that they're doing anything wrong. It's just because the valuation is what it is. So we'll see if that holds true. I don't think it'll matter until March, depending on how traders play stuff. But it is something to watch out for. And guys, NASDAQ now minus 1.13%. So interesting day. Bank stocks just fell off. Ooh. So Derek's saying bank stocks fell down. I'll try Ally. 2%, but there's bigger ones. How about PNC? Probably Bank of America. Fifth Third. Some of them are up, some are down. What's BOA? Am I doing that one right? There we go. BAC. Down a little bit. I mean, for the day, they definitely took a hit. Wells Fargo. So that's, I don't know, and that's opposite too, if you think about it. Like, bank stocks with increased interest rates should arguably be more profitable, okay? So why they're taking a little bit of a hit, I don't know. I think it looks to me like the market needs to think about this, and they need to really analyze who it's going to impact and how. So I wouldn't be surprised if we see some up and down throughout the rest of the day. But anyway, I'm going to get out and do some of my own homework. But it was fun hanging with you guys and watching some of this stuff. Igor, good to see you. Lion, how you do? Papa Powell saves the market. And he is speaking here at 2:30, so I'm going to go watch that and research some of the moves. And yeah, hope you guys enjoy the rest of your day, and we'll see you on the next live stream.